Hi there, traders. Hope everybody's having a great weekend. It's closing up for some of you. For me, it's actually just about noon on Sunday, and it is a beautiful day out here in Tampa, Florida. Beach weather at best. And then, of course, we have the SEC Championship, and I am a Gator fan. Let's go ahead and take a look at the pairs, see what we have going on. It's been a little bit erratic lately, and let's go through. First off, start off with the Euro USD. This guy has been very, very excited about moving higher. You can see that I had been watching this descending trend line from it goes all the way up to 2008. The level was basically at the 139 level, and we also have this resistance. I put a nice short there. Got closed out, not a big loss or anything like that. And then boom, on Thursday, after pushing higher to test the top of this ascending wedge channel, whatever you want to call it. The pair quickly reversed when Draghi came out and just basically tried to talk the pair down, talking about inflation fears and so forth in the periphery, and how there was some sort of measure might be needed. Now, can he talk the pair down? I don't know. And I pointed out to everybody on the Keen feed that the pair did really basically nothing after that spike back down lower. It didn't break below the 138.30 level. It was really just back in line where it had been for the majority of the week. And I need a break of this 138.30 level to be interested in going short this pair. I'm not going to jump in, not going to get burnt again, because I've shorted this a few times. Because when I try to think about it logically, I try to figure out why is the Euro USD going higher, and there's reasons. I mean, the yields in Italy and Spain are higher, so there could be people, in the chase of yield, which is the new thing, moving dollars or whatever currency into euros, and that's making the euro go up. And then we can have the repatriation of banks and businesses trying to shore up their balance sheets, so there could be more money coming back into the eurozone. And then there's also the just the diversification out of dollars that I believe China is probably currently involved in. So that's going to be the gradual push higher in this pair. And then we look at the other side of it. It's a currency block that is and the current account deficits, actually positive current account ratios could also lead to the push higher. But then when you look on the other standpoint, it's a currency that seems to be fundamentally flawed in my mind. It's countries rather than states that. Like in the United States, I'd like to try to compare it to the United States, but we are very much one country. Nobody thinks of themselves as a Georgian or a Floridian. You think of yourself as an American, where over there, it's not so is the case. So the problem is, if the economy is steaming in Germany but it's bad in Italy, can you raise interest rates or lower interest rates in Germany, which would make make it go higher, and then to help stimulate the economy and say in what did I say, Ireland? I don't remember. Make the economy go higher. It's just it seems like it'll take a generation to work, and maybe it will. I mean, I'm not saying it's doomed or anything like that. There just seems to be some flaws, and so what we have here, though, is the currency does continue to keep pushing higher. And what I'm watching for is a break of the 139.70 level, the top of this trend line, to go high. If we break that, then 142 could be in the cards. If we break this 138.30 level, then we could seem to continue to push back down lower. And that where we'd hit the bottom of this trend line here around the 137, 135.60, 135.60 level. Basically, I'd be looking for this 136.40 level as my first target. Until we get a break on either side of that, though, I'm going to stay sidelined, trying to get into some stacker trades in this pair, which is the way I traded the pound, Swiss franc, and so forth. Let's take the Swiss franc, which is basically the inverse of that. You can see the pair broke below the ascending trend line. Then we have that same positive reversal candle there. And basically, at this point, you can't really act on that because, as I said, told everybody, that pair didn't even break back above that zone into the 187.50 level, or close above that level. And until we get a break of basically the 87.50, 188 level, there's nothing I want to do in this cross right here. It still continues to be trading lower, but not really a great opportunity to jump in and stack because the pair has been erratic at best. I mean, look at here. This would be, oh my gosh, broke the zone, great time, but you would have seen this before here. And it came up and just went about 2 pips above that channel, and boom, another shot down. And that has been the way this pair has been moving lower, so it's very difficult to stack into that trade at best. So look for a break at the 88 or the 87.50 level. Pound, this guy is asleep at the wheel. It's like your buddy that finds when you're younger that meets a girl and you don't see for 6 months. It has just settled down. It is just boom, 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 not doing anything. And and it's, you can see that until we get a break of that 168.20 or 165.85 level, I'm not interested in doing it. It's just doing anything with this pair. It's just a chop zone. Same thing. We had the chop zone all through November and all the way up to December. Then we had that spike higher. Maybe this was a fight. You know, they were, actually doing things, and the pair cross moved back up higher, but now they've settled back down, and it can't last like this forever. The cross has to, it could theoretically go on forever if we wanted to do like a theoretic theory, excuse me, can't talk today. If we wanted to be like a professor, just make some crazy thing and we can go that way into infinity. But it's not going to. It's going to break that range, and when it does, I'll be ready to get in between 168.20 and 165.85. Let's look at the rest of the majors, just get an idea. I still favor a push lower in the Aussie. The government has talked about how they'd like to see the pair at the point around this level at the 80s, and they have had, there has been evidence of a slowdown in China, but that doesn't seem to keep the pair push the pair in any direction. You can see that we've basically moving sideways since the beginning of February. This 91 level will be key. I will be watching it, as I've said many times before. Below 91, I'm still looking for a push down. My first target would be this 0.8380 level, which is the 0.272 fib level, and that would be my target in this cross. Now, if we break that, all bets are off, and the first level I'd watch is the 94.50. New Zealand, not really interested in this cross. It's very erratic. I guess they had good jobs data, blew things out. Of course, pushed back higher. There's that reversal, and it closed right back in this zone. I say I'm not interested. I'm going to actually keep a strong eye on this. If we get a reversal here at this 85.30 level, I believe it is, then we could see a pushback down lower, and you could do a nice 4-hour jump in on this cross. And if you get confirmation of a break at that 84.30 level, you could get a nice push down to 83. So it is something I will definitely keep my eye on. If we get another pushback though above this range at 86, I'm not interested, because basically the first major level of resistance is right there at 86.80, and you can see that's just the level that the pair was very comfortable in, a peak basically on 411 of last year. So there's definitely going to be some sellers that could be camping out around that level. The yen, interesting. This guy up, down, all around. Loves this range between 103.50 and 103, and 101 and 101.60. Need to see a break of this range to the top or the bottom before I'm willing to jump into this cross in either direction. We'll be watching, and right now I guess we have the Ukraine situation, and it's interesting that this pair is trading more off the Ukraine situation than the euro, but you can see that with the risk off, if we get a break of this 101, 101.60, then the first target would be 101, obviously psychological, then the 98, and then the 96.50 level. But we'll have to watch here. There is a good chance, if everything goes steers clear on Monday, that we could just get a nice reversal right back up to the top of the range. But a break of this would be key. So basically, a break of that the 101 level, 101.70. We can run it back down to there, but you guys get the point. And the one that I get this from the 50 fib at the 101 level from this move higher. I've said before that I am looking for a break. If we hold this around this 50 fib level, a break up to that 108 level in the longer term. Great Britain JPY is the pair I like to do my stacker trades in. This cross broke lower. I'm currently short. I'll just tell you guys, you can see that this pair right here, this candle closed right on the 50 fib, but it is below this recent low at 168.80, let's say. Not by much though, so we're going to have to watch this. If we get another push down lower, which will probably most likely coincide with price action in the yen, but if we do get a pushback down lower, then we could see it move all the way down to the 163.75. But if we get a reversal here, the trend line is probably right about 170 is going to be a key level, and we get a break of that, then we'll see push back up to the top side. It's in an interesting position in this pair, and it's actually being dictated by other crosses. So this basically is being dictated by the yen right now, because the pound is just flatlining. And the yen crosses, until we get more volatility in the euro and the pound and so forth, have been kind of dead, because they will become a funding currency once again once we get volatility in those pairs. Great Britain odd, you can see that this pair bounced nicely off the 50 fib. It rested there a few days, but it did even break below this zone here, which I was watching at 183.40, but you can see it didn't get it close below that, and now it's trying to drift lower. At this point, you could go short, just putting your stops above this level at 184.90. But that's a trade I'm kind of staying out of, because it just don't like it. And the risk reward is too high. I was actually already in it and closed out at break even after they had the spike down lower. So I don't normally. I'd like to jump into a trade multiple occasions. All right, everybody. So just keep an eye out for the stackers and the euro, Swiss franc, Great Britain, and then we have the fire trades here that. I can go into more details if you want. Just sign up today. You get information on all the trading techniques I do, and you get access to the Keen Feed and Currency Watch, where I go over the setups on pretty much every day, and I go through everything on the Keen Feed every day. All right, everybody. Good luck trading. All these charts are available on the blog. See you guys on Monday.